Hello and welcome to our annual finance perspective for December 2025. Hope everyone had a great Christmas and New Year and is recharged for 2026 and excited for the year ahead. What we're going to do in this presentation, we're going to look at how assets performed 2025 and look forward to some themes that we're looking at in 2026. Before we begin, please note, the information in this presentation is of a general nature only, doesn't take into account specific objectives, financial situation, or needs. We recommend seeking personal financial advice before making any investment decisions. So start looking back. The Sydney Property Index in January 2025, the median Sydney dwelling price was 1,101,000. By December, it rose to 1,240,000, reflecting a strong 12.8% increase according to the PropTrack median Sydney dwelling price index. Continuing supply shortage and increasing demand theme across the year with lowering interest rates has contributed to that outcome. Turning to the share markets, the US share market represented by the S&P 500 grew by 16.65%, and the Australian share market, tracked by the ASX 200, saw a 6.26% increase, rising from 8,201 to 8,714. Now let's look at interest rates. So the US Federal Reserve reduced rates in the final month of the year and now is targeting a rate of between 3.5 to 3.75%. The Reserve Bank of Australia is still targeting 3.6%. For savers, Australian term deposit rates for 12 months range from 3.8 to 4.5% per annum. And for borrowers, Australian 25-year variable mortgage rates are between 4.99% and 5.64% per annum, depending on the type of mortgage, the leverage rate, the features, and the bank. Looking ahead, the chances of interest rates rising in Australia are increasing. To prepare, things we can consider: reviewing our mortgage rate. Should we fix our rate? Should we fix a portion of our mortgage to get more clarity around cash flow for the long term? Reviewing our investments. Are we exposed to long-term fixed interest rates? Are we leaving some money on the table there in the future if interest rates do rise? And the other theme is thinking about what happens in a more isolated and less globalized world with higher inflation. According to Vanguard's view, their capital markets projections show that the strongest risk-return profile across public investments over the next 5 to 10 years are, in order: number one, high-quality fixed income. So this is return per unit of risk. Their capital markets projections show that high-quality fixed income is the best return per unit of risk. Number two is US value-oriented equities, and number three is non-US developed market equities. So Australia, I believe, would fall into that category. Australia has an advantage in terms of its natural resources. Over the long term, there's been demand for the Australian currency and for our resources. So we do have some natural tailwinds there, but that also depends on a number of other variables and dynamics between ourselves and other countries around the world. So it's important to review and prepare portfolios with these types of themes and these thoughts going forward. As always, happy to discuss any information in this presentation. My mobile number's on the screen. My mobile number's on the screen, and my email. You can shoot me an email. Happy to talk. Thank you for watching our annual finance perspective for December 2025. Stay informed, stay prepared. Reach out if you'd like to discuss, and I look forward to working with you in 2026. Thank you.